The focus of this presentation today is about talking about energy efficiency and clean energy opportunities in the retirement village sector, and how the Clean Energy Finance Corporation can work with key industry stakeholders in terms of developing enhanced industry standards. Look, we very much feel that a focus on better energy efficiency and clean energy technology is very well suited to the retirement village sector, and there's sort of three key drivers and applications we can see. Firstly, given the demographic trends we're seeing in the market, there's a strong requirement for new build stock, and it really makes sense to, when you're building that new stock, to factor in the latest clean energy technologies for your buildings. Secondly, from a building owner's perspective, we think utilising that technology will just result in improved returns, but also additionally better business and portfolio resilience as well. And finally, from the resident's perspective, energy efficiency, reducing energy costs basically goes to their cost of living. Now, just in terms of the overview of the presentation, look, I'll give a quick snapshot in terms of who the CEFC is. Our property strategy, built environment strategy, of which the retirement village sector is sort of a key component of it. Talk about some initiatives that we can see that can be applied in this sector and how we could work with participants in terms of driving those initiatives. And finally, just touch on a brief case study in community housing, which is an example this year of a financing which incorporates many of those elements that are equally applicable for this sector. Now, firstly, who is the CEFC? Look, we are an independent established organisation of the Australian Government. We were formed in 2012, and really with the aim of providing financing and also facilitating financing to drive clean energy technology and its application across the Australian economy. We are provided with, we're provided with funding of 10 billion, sort of 2 billion per annum. We've now got allocation of 8 billion, so 2 billion to go to provide finance across the capital structure, and we've got quite a lot of flexibility in terms of how we provide capital, whether it's debt finance, equity finance, mezzanine or so forth, and we really use that flexibility to see if we can drive these outcomes with parties we work with. We've got a staff that we're nationally focused. We've got a staff of 70 based in Sydney, Brisbane and Melbourne. Now, in terms of our approach, I'd touch on some key themes. Firstly, we've got great exposure and insights in terms of key clean energy trends, and we utilise that in terms of what we see to really help the parties that we work with. We're a commercial-based organisation. We look at providing commercial finance, meeting commercial timetables, and working sort of very much based on market standard terms. We're keen to work with sectors to really drive those enhanced exemplar standards in the sector. We've got 10 billion, but in reality we're applying that across the whole Australian economy. So when we look at a particular sector, we're looking to utilise that capital in the smartest way possible to really develop those standards so the industry can learn the benefits of actually designing and using sort of clean energy technology. And finally, sort of innovative, again, we don't, unlike a bank, we don't have restrictions in terms of how we lend or an internal rate of return target that we've got to hit. So it allows us to provide utilise a number of innovative financing structures, whether it's different kinds of debt structures, equity structures, and so forth, to work with our partners. Eligible technologies, the key areas we're focused on in terms of driving across a range of sectors is renewable energy. We've been a major supporter of wind and large-scale wind and solar over the last couple of years. Waste to energy, also a strong focus in terms of transmission grid, distribution grids, and how they interact, particularly with embedded generation. Energy efficiency, all about key technologies to drive better usage, and I'll touch on that in a bit more detail when we go into the retirement village sector. And low emissions technology, that's all about fuel switching, electrification, transport, and so forth. Now, our target is to, or aim is to have impact across the whole Australian economy, which is a big challenge. But we generally divide it into two key areas. One is cleaner power solutions, so decarbonising the grid, and a lot of our work in renewable energy is focused on that. The second area is actually how we use energy, and that's the key focus of the Better Built environment. So property and manufacturing are sort of key areas of that. Infrastructure and transport, we have a dedicated team focused on working with governments and universities, and social and community housing is also a key focus. Types of finance, said flexibility across debt and equity. We have the ability to provide for an individual sort of project or series of projects financing anywhere from 20 million up to 250 million. If I look at debt financing, we can look at project or call asset-specific finance on financing buildings to higher energy efficiency standards, corporate finance across a whole portfolio. Over the last couple of years, we've been a major supporter in terms of green climate bonds across a number of providers. And for, I mentioned our target of sort of 20 to 250 million for direct financing. Below that level, we've also got a series of aggregation partnerships with each of the major Australian trading banks, which means for smaller upgrades, those banks can actually pass on a number of our benefits to a number of parties across the Australian economy. Equity, we've invested in pooled funds, we've supported the establishment of new funds. Now, these are all commercial funds with commercial strategies focused on particular sectors, but they have a particular ESG, energy efficiency, low emissions technology strategy as part of that commercial strategy as well. Also this year we established an innovation fund, Clean Energy Innovation Fund of about 100 million, which looks investments more around that $5 million phase, but really that early venture capital phase clean energy funding as well, of which we're hoping to support a number of companies that are applying technology which we think will have benefit across the whole Australian economy as well. In terms of how we've gone, a bit of a ramp up after a start in 2012, so we've now committed around 2.3 billion of our 10 billion of capital. And last year we committed around 840 million on 15 investments. Now that was just our capital, but that helped to catalyse a total of 2.5 billion in investments in clean energy technology. Well spread across that clean energy, clean power solutions and also the Better Built environment. And look, if I touch on some recent transactions, and this is more focused on the Better Built environment, which I think is more relevant for this sector. We were the sole financier for WorkSafe Victoria's new office development in Geelong, which will be the most energy efficient non-CBD building in Australia. And also we provided a financing facility for the entire portfolio for St George Community Housing, which I'll go into a bit more detail a bit later as well. Now in terms of our property portfolio to date, we've committed around 450 million across 10 projects, probably a bit of a weighting more towards office. But as we're moving forward, we're looking to expand out across a series of sectors, residential and commercial, currently looking at around 25 projects with a value of 1.5 billion in terms of financing. Now, why property and why is property such a big focus is that it is a major greenhouse gas emitter, and estimates are based on recent sort of ASBET report, it contributes to about 23% of Australia's emissions. But it's also a sector which, our view, based on current technology or where technology is going, there is a number of quick wins in terms of the ability for significant changes in energy efficiency to be delivered in a cost-effective manner. And hopefully with our financing, we can help sort of accelerate that to some extent. And look, the aim is, if Australia signed up to the Paris Agreement and to get there, the built environment is a key contributor. And actually we need to move, especially in terms of all new buildings, to them being zero net carbon emissions as well.